What a load of rubbish. Of course, if you have a 70k car loan, Tesla or otherwise, it's going to probably mean that you can't get a house. But this whole article doesn't really talk about the 70k Tesla. It talks about how you should clean up your bank statements, like have less takeaways and have less eating out, because that's what the bank cares about, which is not true, because there's now a difference between discretionary and non-discretionary payments. The bank realizes that if you have a mortgage, you're probably not going to go and spend as much money on Uber Eats, or you're going to pay your mortgage faster. This is what the whole triple CFA thing was all about. People were scared to go out to KFC and spend money on alcohol because they thought that was the difference between getting a mortgage approval and not. And that is not true. What the bank cares about is the numbers working and does it fit within their policy. And the reason why a 70k car loan affects your numbers is because there's a repayment attached to that. It's usually over a very short term with a high interest rate. And therefore, that money that is going to the $70,000 car loan could be going to a mortgage payment. So yes, car loan, not great, all that other stuff, as long as you meet the bank policy and your income can service the hypothetical mortgage that you're going to get out with a test rate and your everyday expenses minus all that other stuff that you spend because you pay $500 a week rent instead of $1,000 on a mortgage, then it's usually okay. The only other thing that I would add is try and have some savings, because the bank does like to see that you can save money. If you've got your kiwisaver for your deposit and you have $5,000 savings, the bank's not really going to care if you have Uber Eats for every meal. But to be clear, they will care if you have a $70,000 car loan when you've only got a $70,000 deposit. Unless you earn loads and loads of money, then it's just about the numbers.